It is Monday, June 14th, 2021. Thank you for joining me, everybody. Bull Boom Bear Bust here. My name is JJ, and I'll be your host through this broadcast. We have a lot of news to get into. Now, first of all, one of the most common questions and comments that I see is, hey, this guy said there was going to be an economic collapse. There's not a collapse. Why haven't the markets collapsed? All right, just for maybe the newer subscribers that are here, new viewers, and I know most of you know this, but there's something called an inflationary collapse. Markets can go up, but the collapse is in your purchasing power. So even if you're making more money now than you were last year, unless you got a very big raise or a big pay increase, or just doing a lot better with your investments, even with higher pay versus last year, you're probably still paying more for all of your goods versus the amount of the raise that you got. So it's possible to get a raise, but yet go further into debt because the cost of living keeps going higher and higher and higher. And this has happened in other countries where the inflation has never stopped. Now, that's one of the big debates that you see in the financial world and with all these economists and even people on YouTube that are trying to analyze the situation. One of the biggest debates is the inflation versus deflation debate. And there's no way to know because this is a manipulated economy. You have to ask the money printers what they intend on doing. That's why you have so many people tuned into the Fed. What are they saying? What are they saying is going to happen down the road? Are they expecting inflation? Are they going to raise rates? That's why we talk about the Fed here. They are the controllers. Right? They control everything that happens financially. And if they don't control it, they certainly have a huge, huge influence on what happens. So right now we're seeing rising prices. Banks have been pledged the promise there from the Fed to allow banks to continue to loan money. The Fed has come out and said they're going to do whatever it takes to support, quote, the markets. And that means supporting the stock market, supporting the housing market with never-ending liquidity for the banks. Never-ending liquidity. There's no ceiling. There's no limit on how much currency can be created out of thin air. It's called the fiat currency. And from time to time I see people that disagree and they say, no, there is a limit. But I've asked this, several times during the years. If you know what the limit is and how much money can be created, please put it down in comments and we'll take a look at it. And don't just give us your opinion, give us your source, maybe a link or something to a Fed document. But yeah, you're not going to find it. There's no limit. They can create unlimited amounts of money. If you would have asked an economist, maybe even a well-known economist, 10, 20, 30 years ago, if we would have this level of debt right now, I'm pretty sure most of those economists would have said, no way, it's impossible. Right? Even economists do not know what to expect, and most of them didn't predict what's happening right now. And when we sit here and we look at things, we predict inflation, it doesn't mean it's definitely going to happen. There's no definite. Kind of like if you're playing a card game. You don't know what cards you're going to be dealt, but you just have to try to prepare and work with the hand that you're dealt. And the same is true when it comes to investing. Some people have a lot of money to invest, some people not so much. And that's why you hear people like me saying we never give financial advice. Each person has their own unique financial situation. But what I do, and this is just me, I prepare for both scenarios. Now, on one hand, it's hurt me because if I would have went more in, instead of having any cash on the sidelines, if I would have went more in to, you name it, housing, stocks, digital assets, then I would have made a lot more money versus what I made because I had some cash sitting on the sidelines. But the opposite is also true. If you see an economy deflating, crash, or correction, then those that are all in, meaning they have no cash on the sidelines, they're fully invested, then they're going to be hurt. So because I don't know exactly which way this is going to go, I play the fence. Some of you are a lot smarter than me. Let me know down in the comments what's going to happen. But everything from a financial perspective looks to be getting worse for most of the U.S. population. Now, that doesn't mean for everybody. Some people are actually doing better now, especially investors. There's people that made millions off of digital assets. There's people that sold their home for $1 million that bought it for $500,000 just 7 or 8 years ago that doubled their money. So yes, if you're in the right place at the right time, the right investment, you can do very, very well. But for most of the population, remember pre-pandemic, it was 70+% of people living paycheck to paycheck. Now it looks even worse. Now, the reason the economy doesn't look that bad is because all the things that are being done to keep it propped up. The eviction moratoriums, the foreclosure preventions, all the new stimulus programs, enhanced unemployment benefits, freezing of the payments on student loans and other forms of debt loans. and on and on and on. So let's talk about what's happening here recently with the food situation. We're having a food crisis here in the U.S. And the food lines that we started to see emerge back when the shutdown recession was kicked in back in March of last year has not subsided. And actually, it's gotten even worse if you actually look at a lot of the food banks and what they're saying. They're saying they're seeing more lines, more people waiting for food. Some of them running low on certain types of food. We have the farm situation, a massive drought here in the West here where a lot of the farming takes place. Many people don't know this, but California is actually the leading agricultural state in the United States. But the situation is so bad, they're even talking about it over in Europe. This is out of The Guardian. U.S. food banks prepare for demand as Republicans end unemployment benefits. Now, the Republicans look pretty bad right here, I'll be honest, because there's a lot of people that need those enhanced unemployment benefits. But people on the opposite view, they say that the extra benefits are preventing people or discouraging people from going back to work. So we'll see how it works out in these states that are ending these enhanced federal unemployment benefits. But it looks to be a bad situation for a lot of people. 19.3 million adults say in late May that their households didn't get enough food to eat, while several states have started to cut benefits. So over 19 million people, not enough food. And I think it's even worse than that because a lot of people are only getting food because of the handouts, because of the stimulus, because of not having to pay their rent, their mortgages. Think about how much worse it would be if it were not for all the forgiveness programs. If everybody had to pay their rent and their mortgage, that's going to be less money that they'll have to pay for food. And who knows, maybe it's 50, 60, 70 million people that wouldn't be able to afford food if it weren't for all the forgiveness and the assistance programs that are out there. Nobody knows. The level of manipulation here is impossible to predict how bad it could get. And that's why one of our themes here is prepare for the worst, right? Hope for the best, pray for the best, but prepare for the worst. And according to this article, food insecurity, or households that didn't have enough food, doubled from 2019. In 2019, it was about 8.5 million adults who didn't get enough food to eat. Now it's ballooned up to over 19 million. So at this pace, who knows how much worse and how fast this is going to be arriving. But we also see a perfect storm. We see farms having a lot of trouble, especially out here in the West again with the drought. Even before the drought, a lot of other farmers had a real bad time because of the weather and the changes here in the environment. And also, of course, the rising cost of living. And here's a quote out of this article. It's pretty scary. Quote, "We hope it's not going to take us 10 years to get our food insecurity rates back down to pre-pandemic levels, but that's the kind of timeline that we're looking at," unquote. That's Teresa Shriver. And she's the manager at one of the food banks that's being discussed here in this article. So pretty scary times ahead, folks. It may be already scary and not so good for a lot of people right now. Maybe a lot of you that are listening. Now let's get a wrap up on the markets today. We did see the Dow Jones close in the red, but only slightly. It looks like we're still going to have full support for these markets. Here's the big one. Take a look at oil. Another increase, now $71.14 a gallon. No relief for those that have to commute to work and people who travel. The truck drivers in the shipping industry seeing a lot higher prices now to fill up their tanks. That cost is going to be passed along to the consumer. You can put your money on that. Gold and silver both down fractionally. 10-year bonds still at about 1.5. That shows us that there's going to be more support for the housing market. Mortgage rates, the Fed gets involved in the bond market to keep mortgage rates suppressed. So they're doing whatever they can do to keep these rates low, to keep the charade going. So it's going to be all for today's update. Stay well, everybody. Keep stacking. Stay prepared. Until next time, bye for now. Stay safe. Peace.